And switch it to Mike.
Welcome to the Self-Evident Podcast.
What's
You got your
up?
boys, Mike. You got Massey. We're all here. Welcome in. Thank you for watching. Don't forget the Massey view. We got the Massey view. It's all about the Massey view. It's beautiful. It's wonderful. Glorious. I'm wondering how long he can hold it.
I can hold. It's not like peeing, Mike. Jeez. Well, wait, I shouldn't even have said that.
Yeah, you led people in. You're the one who led them into it.
That's
See,
true.
this
I
is-
did. I
this-
will admit that.
Yeah, this is
Dude,
why people watch.
We got to talk quickly about Missouri. You were awesome. I so ecstatic to because that was what today's Friday. We didn't do a podcast Monday. Our bad. If you were expecting it, it did not happen.
I want you to tell people why we didn't do a podcast on Monday.
Why didn't we do it?
Because we got in at like 5:30.
That's right. So I forgot about that too.
So I guess I'll tell the people.
No, so here's the thing. Don't fly Frontier.
There you go.
Paul's here with us. He's the smart one. So he's another one of the smart ones. I always say Mike is a smart one. He's above
then
us.
there's Paul.
and here's where it's at is we go Frontier and it says your flight is at 10 something at night. Get in at 12:30 in the morning. Good. We're good. It didn't get in till it was 11:30 almost, and then we waited till another 30 minutes on the plane or something like that.
Can I tell this story?
Go ahead, you do
because
it.
This
Obviously,
is great.
Mexicans can't tell stories, so go ahead.
No.
I went straight racist
Oh,
on that.
he
dude.
did. He got offended by that. I was just excited to include myself in the storytelling with Massey, and he gets offended. See, now he's on his phone. Now he's not even. Yeah.
Let's get him again. What happened?
You got caught.
They wait for these moments, guys, to do this to me. Let's see how we can ruse Mass. All of them are fired. And then I got to rehire him for the next show.
Yeah,
so.
exactly. Good luck. So we're the plane's there. They start checking tickets. And this is when they decide, mind you, they're late by what? An hour and a half.
Oh, dude.
This is when they decide they're going to check every single person's personal item for whether or not it's small enough. And they got the little box, so you try to put the bag in, and they are having every single person try to shove their bag in that little metal box. Otherwise, they're going to charge them for a carry-on. I was beside myself with this whole situation. It's like, obviously, your mission statement is not customer first,
Bro, and they were like not cool about it. Like,
No,
first you're
they
late,
weren't.
and then you make us check all our bags. It's like, guys, you already made a slate, right? So then we get to Orlando, right?
Yep.
We're 2 hours from home, hour and 40, whatever it is. It takes a half hour to get our bags on the carousel. And then you parked 5 miles away from the. It's your fault.
You got to throw me
Yeah,
in with
I
Frontier,
did
huh?
because he just threw me under the bus. I'm throwing him. He goes and parks off site.
Because I saved us like $30.
$30. $30. So, anyways, we didn't get home till 5:30 in the morning. We didn't want to do a podcast, so forget you. I'm kidding. We just
Wow,
didn't
you're
podcast.
attacking everybody right now.
Anyways, we're doing good. I just got this in me. We're doing great. Paul brought donuts over, as if we need them, but we had them. So, guys, we're talking about banking industries this morning. You see what's going on, right? The problem is a lot of people are misinformed. And I'll use this quote. I don't like quoting him, but I will because he's right. Neil deGrasse Tyson once said on a podcast, the hard part about the average person is they know just enough to become very dangerous. And so what happens is we know just enough. We hear a little bit of sound bites here and there. We listen to our favorite political pundits. So we get their little point of view. And all of a sudden we base our decisions off that instead of doing our own homework. So we're talking about the banking system this morning and what happened with the Silicon Valley Bank and all these other things that are happening. And we brought Paul on because my man knows economics. He's very big on that stuff, but he knows a ton of crap. He does a lot of our research too. And he does a lot of our blogs. If you have not subscribed, I mean, what are you waiting for? TheSelfEvidentTruth.com. Check out the blogs because my man here, he's the brains. I'm just the pretty face. Anyway, so we're talking about the banking system. And Mike, I want you to take over here because that's a nerd fest at this point. So
It's all right. I'll get you back. Don't
You
worry.
will. You
I got a long
eventually.
memory.
He will. It's a nerd
Oh, yeah.
fest right now.
Yep.
Before
No,
you do that, I just want to ask
yeah.
one question. Is it better to have a beautiful face or a smart mind?
Oh, that was a diss itself. Paulie. Paul's on the attack mode. Oh man.
He's not
Anyway,
wrong. Paul, before we get
This
into
is the
it,
last show Paul will be on, and
I do want to. I want you to quick, kind of give your history
Yeah.
because it's not like you're just some
Joe Schmo.
armchair quarterback who read
It's-
a blog or two and
And
decided
if you could,
to
can you
give
speak
some
into the mic
information.
too? You got to speak into
So-
the microphone. There you go.
What's your history with the banking sector, finance, all of that?
Sure. Most of my working life was spent as a computer programmer, but I also spent 10 years as a controller with an accounting background. But then I went to work for actually a bond investment desk for a mutual fund in Boston, the Boston Company. And so I was writing software for doing the metrics for bond investments. So
So
that's how I knew about that.
You
Oh,
you kind of had
yeah.
to have an idea about bond investments,
Just
and
a
all of that.
skosh.
Just a
Little bit, little
right?
bit. Yeah.
And
Yeah.
so we were having a conversation in the office, and I kind of felt like we need to clarify this for people. We need to, because so often the news is talking 100 miles a minute. You got the government coming out and saying the economy's fine, nothing's wrong, nothing to see here, which we all know.
Mhm.
Trust your government, right?
That's a euphemism for, oh boy, we're
For
going
all
down.
crap.
Yeah. And what does the government know about anything?
Exactly.
oh
and
my
when they
gosh.
say it's okay, you probably should start running.
Yeah.
And then you had the banks who were saying the sky is falling,
Mhm.
and then you had other people who were saying nothing to see here. And so we thought it would be good to just kind of break things down and say what is really going on and where are we at in all of this. Because I think it helps for all of us to be well informed without getting into all the divisive stuff of emotions. And Massey and I have always said what we appreciate about you is you push back against panic,
Yeah.
emotional fervor.
And too, even there's a lot of people who come out who are prophetic voices, and we should listen to a lot of them. There are many of them though who are not on the right side of this, and what they do is promote more fear and what the enemy's doing. And it's like if we just wait a couple of years, just if we
Yeah.
wait a little bit of time,
Mhm.
it'll correct itself. And I'm not saying there isn't something nefarious going on. There's always something going on, but just let's get a grip on what's going on. And if you know, the one thing you can base a prophetic word on is knowing the word, right? So you can base a prophetic word on that. Also knowing history. What are the things? What, like I keep hearing this a lot in our discourses everywhere I go. We've never seen it this bad. I'm like, dude, 240 years ago, it was not a walk in the park here. It's actually worse than what we have now. And yet God gave us the victory. And so we're really cautious about like, oh my gosh, the world is collapsing. No, I just think we need to know history a little bit and figure this out and rightly divide the word of truth, right? So that's why we're here. That's why we're doing
Right.
this stuff.
So, Paul, let's get started with just an overview of what's going on, and then we'll kind of break down the parts.
Sure.
So go for it.
What we've got is a situation where bank managers have been making some decisions about how to manage their cash flow, and the cash in, the cash out. Banks take in deposits and then turn that around and turn that into loans to other people. And you can just imagine that if all of a sudden all of the depositors wanted to have all their money back, there's no possible way that a bank can give them all their money back because a substantial piece of that is already loaned out to other people.
So basically, I give my $10 to the bank.
Mhm.
The bank takes 9 of those dollars and starts loaning them out to
Yes.
everybody. And
Yes.
if I come to the bank and I say, I want my $10 back, they're going, we don't exactly have all of it
Mhm.
because everybody else wants their money. Right.
But at the same time, it's not, if it's only one person, it's no big deal.
Right.
It's just if everybody wants their money back at the same time. In the case of Silicon Valley Bank, you had all of these venture capital guys with millions and billions of dollars on deposit there, and they wanted it all out on the same day. So they had a $42 billion run on the bank on a single day.
So I want to touch on this idea of bank run. What we have to understand as a people is it's an emotional reaction.
It really is.
So-
Yes.
I've got an analogy for this. I think it was in Singapore. There was a bus stop that had to have construction.
Mm.
So they moved where the bus stop was supposed to be. And so people started gathering at this bus stop. And this bus stop just so happened to be in front of a private bank.
Mhm.
Well, people saw this group of people standing out front of the bank and thought something's going on here because there's a large group of people outside of this bank. And so people started going into the bank to pull their money out because they didn't know what was going on.
Mhm.
Which more people saw people going in and out of the bank to get their money.
Panic,
It was
Yep.
panic. It collapsed the bank in an afternoon because a bus stop got moved.
Right.
This is what happens with bank runs, with panics, which what causes bank collapses, right?
Right.
Sure does.
Now, in the case of the Silicon Valley Bank, you had one uh, venture capital guy who was watching what the bank was doing with their normal processes, and they were running short of cash on hand. I mean, cash on hand for a bank is called liquidity. Having enough to pay the bills, to let people use their accounts to fund their own lives, paying their own bills, things like this. But he noticed that this bank was declining in its liquidity. And so the bank executives were taking steps to improve their liquidity by selling some bonds. But the VC guy told his VC pals, "Hey, I think there's a problem here. You should get your money out."
Right.
And
So
that's exactly what happened.
so he was watching the bank
Yes.
and he noticed something's wrong here. They're not going to have my money if I need it.
Mhm.
And so he points out to his buddies, "Hey, something's going on here. We got to get our money out before something happens to these guys."
Right. And one of the motivations for doing that is that the millions that they had on deposit are not protected funds. We are all used to having bank accounts that are less than 250,000. I assume everybody here listening might be in that camp, might be a few others, but $250,000 is the limit that the FDIC will backstop you for. These guys had millions on deposit and they're not protected.
So the 250,000 of their billions of dollars they could get back.
Yeah, that's exactly right.
So-
Now, subsequently, the FDIC has come out and saying, "Hey, we're going to backstop everybody, all the depositors," but that's not legal.
Right.
They're doing it anyway.
And now what I want to get into in a little bit, you said something that I want to parse out for people. So you talked about bonds.
Mhm.
And I think it's important for people to understand with SVB what happened in the realm of bonds and why this VC was looking at it going, there's an issue with what they've got on their balance sheets as far as bonds versus our money in the bank.
Yeah.
And s-
That's exactly right, Mike. So we know that banks give loans to individuals and to businesses so that they can operate. And normally speaking, that's a bit of a risky operation. You have to have good credit so that they can be confident they're going to get paid back. But they also keep a reserve fund of cash, but they don't keep it in pure cash. They buy government bonds, which are supposed to be risk free. And that's all fine. But if you have an environment where the Federal Reserve is raising interest rates substantially over a short period of time, as we have experienced in 2022-23, the price of the bonds that operate contrary to the interest rates. Interest rates go up, bond prices go down. So the price of the bonds which are on the balance sheets of the banks are decreasing in price. It's the same thing that would happen if you had bought a house at the peak of the real estate crisis that happened in 08, 09, and your house went down in value after that for some substantial period of time. And as long as you could continue to pay your bills, you could hang on to your house and eventually the price would come back up. And that would have been true for Silicon Valley Bank as well. Those bond prices would come back up if they had another year or so to wait.
But
And
the VC guys,
they didn't want to
called
wait.
them on their bluff.
That's exactly right. And Silicon Valley Bank executives in particular, they doubled down on buying those bonds, even at depressed prices, believing that the Federal Reserve was going to cut interest rates later this year. Actually, they were assuming it's going to be in the first quarter. Not going to be in first quarter, maybe by the end of this year.
Because they're already raising the interest rates again, right? So
Yes.
like what that does is, I know you probably just explained it, but like getting specific, I was learning a lot when we were talking, you and I, about how interest rates work and like what it does to the economy. So they raise the interest rate to stop inflation.
Yeah.
So they raise it, so it makes it harder to buy, right? So it stops production and there becomes
Prices start to
decline,
level out.
right? So then this whole thing with the banks is, as the interest rate goes up, the bond prices or the bond value goes down. So you see the adverse effect of what's what's happening. The lower the interest rate, the higher the bond value, right?
Yep.
But then because of the printing of the money, inflation goes up because we can't
Right.
cover our debts,
Right.
right? So inflation goes up. So then they raise the. You see this mess? That's what government does. That's your government in a nutshell.
That's the self-evident podcast.
That is it. I mean, seriously, like I don't know if you can bring any light to this, but this is how you are a very staunch liberty-minded dude. You are a classical libertarian, not libertarian in the modern sense, very classical libertarian. I pretty much put myself in that camp, more the theonomy, like we talked about theonomy.
Yeah.
But I put myself in that camp. What do you think? You've studied like the Depression, you've studied all these things, and you kind of know that side of history. I'm still getting into that stuff. Can you tell us like kind of where this originated in a sense, so we can start getting a better grasp of, hey, what to watch out for next time, and how do we what do we do with our lawmakers now? What's going to happen? Like what has to happen?
Yeah.
Type of thing.
Sure. Just going back to
Speaking of that,
okay.
you got to.
The biggest bank crisis in American history was in 1930, when the stock market crashes in the October of 29. Shortly after that, all the banks collapsed as well, for the same reason that SVB collapsed, because there was a run on all the banks. The problem in those days, that there was no government protection at all.
There was no FDIC.
No FDIC, no protection. So if you didn't get your money out that day because you were the last guy in line, you never saw that money again.
Musical chairs, you lose.
That's right.
That's pretty much what it is.
So that was a terrible calamity for the entire American economy in those days. And if you think things are bad now, you really need to understand what happened in 1930 as to what happened to America, the stock market and the banks. Okay, that was terrible. There was no protection at all for investors or depositors in a bank. So things are better today because as a result of that, let me put it this way, they're better for us in protecting our deposits because the government has developed programs that
dripping with condescension.
yes,
I love it.
but the point of the matter is that the government protection has made us more dependent on banking operations than we would have if we had never had those protections. So the bottom line is, for anybody who's got 250,000 or less in some bank, the American government is going to make sure that you can always get your money back. So that is a bright side to the events that have happened in the past. That's even an improvement over the 2008 and 9 calamity, because in those days it was only $100,000, only a few years ago. Now it's $250,000. So as long as you don't make any money and you don't have a lot of excess wealth going on, the government will protect you. But apparently now they'll also protect you if you're a VC with millions.
Right. And what's tricky about that, Paul, and correct me if I'm wrong here, what's tricky about that is it's no longer a risk reward thing. You're just protected, right? So like, I think in the 1930s it was worse. You're right. But then I hope people learn from that. The hope is don't put your eggs in a basket. Be careful what you're investing in, right? But now we're borrowing money on our future, from our future children, to pay us back for our stupid in a sense.
No, you're right. You're absolutely right.
So isn't that the danger? And can that be and is that a cause of greed? And I'm not, because to be ambitious, I don't think is wrong. Ambition with the wrong heart becomes greed and lustful, right? To be ambitious and want to get ahead is great. Mm-hmm. But now we have a government that's like backing everything. Like, so they own you, really, in a sense. I mean, am I right about this?
In a way, that's true. What you're really talking about is the problem of moral hazard.
Sure.
If the government backs you up, no matter what you do, then you're never going to get better. You're going to continue to ante up your risk levels, and really by you, I mean bankers, investors, that kind of stuff. They take on more and more risk every time the government backs them up.
Right.
And of course, the people who end up paying for that are the average working guy most of the time. Now, just a quick thought, though. In the 2008 and 9 crisis, a lot of the banks that either went under or were bought by other larger banks, the government was not at a net loss for taxpayers bailing out these businesses. What ended up happening is, in the sale of the assets that happened in conjunction with this, the government was made whole. So they sold off the bank assets that they had to seize, and they kept the profit from that. And then they used that as a pot of money to bail out businesses. We don't have to like it, but it didn't come entirely from taxpayers' pockets. So I don't even think it was all terribly legal either. But nevertheless, we know that the government does illegal things on a regular basis. And so there you have it.
Yeah. And I think in this situation, especially that concept of greed, greed at least is controlled with risk.
Yes.
But if you get rid of risk and you
Mhm.
protect the greed, then there's nothing to hem it in, right? There's nothing to
Absolutely.
build boundaries around it. And I think what we're watching, especially so they and fill in the gaps for me. The FDIC has how 130 billion or something in their protection fund for
Yeah,
all
but
this,
of course
something
that's
like
a
that.
drop in the bucket.
Right. That's the
And that money comes from banks who pay premiums into this insurance corporation.
Right.
Yes.
Now all of a sudden it's getting floated. Well, what if we back all 18 trillion of deposits in the US banking system?
Right.
I want to ask you, do you have 18 trillion on hand?
Nope,
Mm-mm.
I don't.
But
Mm-mm.
We have a question from Michael Liggett asking about what about the implementation of the FedNow digital currency?
yeah,
That's not directly on point to what we're talking about
right.
today.
I was
How-
going to move that one to later.
Okay.
Mid-
Okay.
But
But yeah, we can deal with it at some other point. Yeah.
so we're now talking about 18 trillion to backstop, which we have nowhere to get it from.
No.
It's something like 75% of the GDP. But now we're just
Yes.
throwing out ideas of how we can, and what I read into that was they're coming up with a way to make everybody feel better. It's almost a, we know we don't have it, we know we can't implement this, but if we tell people we're going to do it, everybody will calm down and we'll be okay.
Well, because you're really talking about confidence or a con game in a way. If banking depends on confidence that the money is going to be available when you need it.
Right.
Even, and by the way, this applies to both paper currency like our dollars and gold and anything else. Nothing has absolute intrinsic value in the world. It's only what people believe or have confidence in and are willing to exchange for an agreed upon amount. So it's a confidence situation. So for the government to come out and say, hey, we're going to backstop everybody, it's specifically designed to instill confidence in the financial markets, because without that confidence, every country would go completely upside down.
Right. So go ahead. Go
No,
ahead.
I'm just thinking, like you brought up this in a kind of a roundabout way, but you said it twice now. It's illegal. Why? Why with what happened with Silicon Valley Bank and the government backing all those things? Why is it illegal?
Because the Banking Act of 1933 that established the FDIC set the parameters of who and how they can be protected or made whole. That Banking Act was amended by Congress back in the 60s, and then again with the 2008 and 9 thing, where they increased the backstop amount to $250,000. This is a legal. This is a law that was passed by Congress in 1933. It's been updated a couple times since then by Congress. The FDIC cannot change their mandate and their parameters without Congress. And by the way, Janet Yellen, Secretary of the Treasury, who thinks she's got the power to do it, she's trying to work with the FDIC basically to override the laws of Congress. Well, this is a Supreme Court case waiting to happen, but by then the money will be gone.
Mm-hmm.
And along with that, the House would have to approve something like that, right?
Congress, yeah. Mm-hmm.
And in the House, what you have going on is, and I've seen this pointed out, and I totally agree with it. You have the progressives, the hardcore progressives, who they hate the billionaires, they hate the corporations, they hate the big banks, so they're not going to be in on, let's bail out the big banks and the billionaires. And then you have the Freedom Caucus on the other side of it, who are like, it's not our job to bail this stuff out. We're not supposed to get involved in the free market.
Mm-hmm.
So there's little to no chance of anything like this making it through the House, right? So it would have to be an end around by Yellen, by the FDIC. You know, like the only way to get something like that done is to do an end around, which
Right.
is really nasty politics on its own right. you
Yeah, and
know?
it sets precedent because the more they can get away with this stuff, the more other people will do it too. It's just like the
Right.
IRS
Yep.
going after, the 501s for a long time. I mean, it sets
Mhm.
precedent. When you
Yep.
keep setting precedent with no action against it, it just keeps going. It gets worse and worse and worse. That's why presidents now write executive orders like literally they're writing out coffee orders. You know what I mean? It's right. I'm serious.
Change
Like
this
literally,
system.
it's like, you know what? I just want a ham and eggs. They just start changing things.
Yeah.
Because of precedent. And it's dangerous to do that, right? When he's saying it's illegal, what we're saying here is this is why it's so important to be vigilant. Most people will be like, well, see, now Biden's bailing them out. And even that statement, it's like, is that entirely true? We don't know. You got to really do your research and do your homework. That's why we get smarter people.
Yes. Somebody who can
And then
tell
we
us
bring
what's
on the
going
experts. Because I don't want to study it. You do it. And then you tell me how stupid I am.
You just tell us what to think.
That's right. I know history pretty decent.
Yeah.
Homeboy knows, all the other stuff.
And I do want you to say, Paul, and if you have another line that you really want to go to, go for it. But I also want to get into where are we at now? Like, how bad is it?
Mhm.
And what should our response be? Right. So, if you've got another thought,
Sure.
Cheryl,
No,
go for it
let's
first.
let's
but-
go with that one and see
All
where
right.
we go.
So, how bad is it?
Well, listen, this is the thing. The banks that buy bonds as a way of keeping a reserve in cash that is quickly convertible from a bond to cash by selling it. You sell your bond, you get cash immediately. The federal bond market is extremely liquid, so people are buying and selling all the time. So it's very easy to convert your bond in a moment in time into cash. And banks use that as a way to fund their operation and to pay depositors when they want to take stuff out. What the problem is that if the bank is buying longer dated bonds, 30 years for that, when current people want to take their money out, there's an imbalance there in terms of the money that they can get for their bonds.
Right.
Because prices of bonds go up and down based on interest rates, and longer term bonds have a lower yield and so a higher price. You would think that would work out well. In this case, it did not, because there was a mismatch between what they need currently and what they had planned for the future. Now, every bank does this, but the question is the smarter executives at banks will know what the matching is of their short-term needs. I mean, and it's really a question they do. Now, technically, they have bank regulators that are supposed to be overseeing the bank, make sure that their choices. The problem is, bank want to more the stock price, their salaries go up, bonuses go up. That's what they want to do. So
Right.
And some um,
Failing?
Yeah. Let me know. Hear us? Yes.
so.
Wow.
It is really bad. Right?
Users are logging in.
Yeah. All right, we'll cut the feed. In.